Good morning, everybody, and welcome back to Blockchain People. My name is Socrates Minas. I'm the Business Operations Manager at DECOR, and I'm going to be your host for today. And for those joining us for the first time, DECOR is an institutional grade research house that we identify and uncover potential disruptors in the digital asset space. Blockchain People is our YouTube channel where we invite the movers and shakers from the industry to tell us what they're up to. So today I'm delighted to be introducing Daniel Elsawey from TIDEFI. TIDEFI is a DeFi project. It's a decentralized exchange. I met with Daniel when I was at the London Blockchain Expo last month, and today we're delighted to have him to the show. Daniel, welcome to Blockchain People. Pleasure to have you here.
Thanks for having me on, Socrates. Great to be here. Looking forward to having a chat.
Excellent. Okay. I think a good way to start, Daniel, is start from the grassroots. So I think a good way is to explain to people what is DeFi. What does decentralized finance mean for you?
So DeFi has several definitions, but at the core of it, it's cutting out the middleman, giving the user direct access to whatever they're looking to buy, sell, or store. When we look at centralized environments and we look at the traditional markets, we have exchanges, we have brokers, we have prime lending facilities, custodians, banks. DeFi really started gaining traction when users were able to get access to assets maybe that they haven't been able to access before directly without having restrictions via their financial institutions, or from a lending standpoint, from a yield standpoint, an area of finance which is giving you yield maybe as a new asset class which you couldn't access before in the traditional sense. That's the core of what DeFi is.
Excellent. And one of the key features of DeFi is it relies on smart contracts, which are self-executing contracts with the terms of the agreement between the buyer and the seller being directly written into the code. And as you said, this moves out the middleman. And what we have as a result, we see more fast, transparent, and secure trading. So maybe let's discuss the difference between a centralized exchange and a decentralized exchange. And perhaps you can tell us a little bit about the differences between centralized and decentralized exchanges.
Sure. So centralized exchanges, if we talk about crypto centralized exchanges, are very similar to traditional financial institution exchanges. They have an internal database where you credit and debit trading. It doesn't happen on-chain. It's not transparent. And there is a compliance officer which will restrict or can restrict your withdrawals and assesses your deposits coming in. That's probably where the similarities between traditional finance and a centralized exchange stop, because in crypto, we have bundled all of those services in a centralized exchange. As you've seen in the news recently with certain large companies blowing up, there is margin available via the exchange. There is lending available via the exchange. Whereas in traditional markets, these are separate divisions, completely siloed areas of the business which manage their own risk. Now, the difference between centralized exchanges and decentralized is normally we see it as this. You can enter into a decentralized exchange normally with a wallet. The wallet at the moment doesn't, for the vast majority of businesses, require KYC to enter. You have a wallet, you are effectively anonymous. You move in with your crypto assets, Ethereum, ERC20 tokens for the majority of exchanges. You do a transaction or a swap or a trade, which means you swap an asset A for asset B. You pay a fee to the network. That network could be Ethereum, that could be Polkadot, it could be Chain, like what we've built, but it's a ledger where you're able to see the transactions. Now, the key feature here is transactions are immutable. They cannot be reversed, not in centralized businesses, traditional or crypto. You can't break a trade, you can't reverse a trade. Once it's occurred, that's the immutable part of the transaction. Normally, with these networks, whether it's a proof of stake or delegated proof of stake network, you will have a bunch of validators run by external people. These people will then validate that, yes, the transactions going into this block are correct, we agree with them, and we form a consensus saying, yes, this is a legitimate, non-nefarious transaction. Effectively, it's saying you have the balance that you've said you've had, and you're able to make this trade because you have sufficient balance to make this trade in a very simple sense. So it's effectively like an internal checking engine, but it's distributed consensus in that form. So the cool thing, though, about decentralized finance is this. As the industry is moving closer and closer to regulation, and I'm sure we'll discuss that a bit later, where this industry is moving. But what's very cool about this is the ability to tokenize assets on DeFi platforms. Centralized exchanges naturally cannot do this. They are just a ledger. They connect to other protocols, blockchain protocols, to accept deposits, hold them in custody, and then allow you to trade them inside their database. DeFi, however, gives you the opportunity to tokenize assets. Tokenize assets, trade them on a transparent blockchain where you can see all of your transactions immutable, and all of the trading is visible to all parties, not just an internal individual at a compliance firm or an internal individual at the regulators. This is available if you run the explorers for most of these blockchains. You're able to see the transactions occurring live, as long as you know what the transaction ID is.
Sure. Excellent. Okay. So there's over 610 centralized exchanges and just under 200 decentralized exchanges. Tell me a little bit about the problem that you're trying to solve here, Daniel. Why have you decided to do this? And really, in effect, what made it click? Why did you decide to do this?
Okay, there were two main reasons. So looking at the DEX environment, decentralized exchange environment in DeFi, some of the biggest exchanges like Uniswap, Curve, etc., that set up since 2019, even myself as someone who's been in crypto for many years now, felt it quite difficult to understand at the very beginning how to use the platform. The UIs are very difficult to use. They're slow and expensive. And what was interesting to me is this. Whilst building an exchange would mean giving access to people to a new user interface and a new experience, that wasn't enough. For us, it was about taking this to the next level. How do we get crypto and digital assets mainstream? There's no point in building, in my opinion, another exchange that allows you to trade Bitcoin, ETH, and the top 100 cryptos, because you can already do this quite well on a lot of centralized exchanges. There's no huge value in doing so. What is interesting, however, is tokenizing real-world businesses, allowing them to have a token which offers extra rewards to their users and being able to use that in the real world. And these are real-world businesses. This is, in my opinion, what clicked and thought, okay, we can take crypto from a niche market, even with a growing market cap, into the mainstream. I think the average user doesn't want to really know what technology they're using. And I think I used this example with you before. When you use Apple Pay or use Google Pay, you don't really, majority of users at least, don't really know the security and the features of how it actually works functionally. This is the same like me saying you have a rewards program and underlyingly uses blockchain with delegated proof of stake. Not many people know or care about the underlying tech. All they want to know is it easy to use and secure? And if those two features are there and it gives me value to my real day-to-day life, which these tokenized assets could do, this is what makes it go mainstream.
Okay. What made us really excited about your project, Daniel, when we was doing our audit, is that your exchange is built using the Socrates toolkit, which allows for a high degree of flexibility, composability, and interoperability. Why did you choose to build your own layer one? I mean, this is really fascinating here because most of the exchanges that I've come across in the centralized worlds, most of them are just APIs and plugins. They don't actually have anything. And what we loved is that TIDEFI is actually building from the ground up. So why was that? Why didn't you just, jump on something else instead, or build on top of something else?
So we had a couple options, right? We could go to the the easy path, use a current blockchain which is currently in the space, mainstream, market cap in the top 10, and build a DEX on top and compete with the other DEXs in the space. However, the problem of doing that is, by us not building the actual initial blockchain or building on a SDK, which is widely used and safe and secure and mainstream, we weren't able to build the chain specifically to be able to handle high frequency trading. And when I say high frequency trading, I don't want anyone listening to this to think that we are at the FX level of high frequency trading. We're not in picoseconds, etc. However, we are much faster than other mainstream chains. Now, by doing that, we could have gone to another extreme and said, let's build everything from scratch with no technology that's ever been used before. But that requires an R&D of multiple years. You're not 100% sure if it's going to be secure. So we built on Substrate. Polkadot, Kusama use Substrate. Very well-known blockchains. They haven't had any issues. We thought that was a fantastic foundation to build upon. This also allows us, once we build the chain, to now produce a lot more direct interoperability. Later down the line, we can build interoperability with Polkadot via parachains, for example. That's what Substrate gives us. That's why we chose Substrate specifically, but why we chose to build our own layer one is we wanted a tokenization venue or a marketplace where the core function of that is exchanging of those specific real-world tokenized assets. And for us to have fast consensus and be able to really use it for the use case that we want, we had to build our own on top.
Excellent, excellent. Okay. So TIDEFI uses a distributed central limit order book. How is this different from a centralized exchange? And what does this mean for the actual user? How does it work? Because I understand there's algorithms and things like this involved. So could you tell us what this distributed central limit order book is about?
Sure. So our central limit order book is a unique feature of a DEX. There are a couple other businesses that have decided to go down this path, but the vast majority of DEXs have produced their liquidity or pricing for assets via liquidity pools. So a user would come in, bond to the pool or stake to the pool, and they would get rewards as a result. And it's done on a very simplistic linear equation. Some are more complex, but at the end of the day, there's two variables and a constant, and that gives you a price. You have asset A, asset B, there's a quantity of each, it gives you a price. When one asset goes down, the price changes. Now, looking at centralized exchanges, and we're moving away from crypto for a second. When we talk about centralized exchanges in the traditional market, we have market makers behind that. That's a central limit order book. They provide two-way prices. They set the price for the asset in the market. They're able to also react to market moving news very quickly and set a new correct price for the asset in the market based on the incoming news. Plus, they're able to adjust the price based on demand and supply flows coming into the market. So they are what we would call a price discovery venue. So if you want to know what the actual real price of this asset is, you go to these venues and you understand that. So, for example, London Stock Exchange or New York Stock Exchange, that's your price setting venue for the price of Apple or Vodafone. Now, centralized exchanges in crypto use central limit order books also. That's why you see, if you look at the volume on exchanges across the board, the highest volume exchanges in the world are the Binances, the centralized exchanges which have central limit order books. Now, market makers, again, will set the price, will adjust their price based on demand, supply, and news coming in. The downside of traditional DEXs that use liquidity pools, again, as I said, there's no market makers technically in there. They're users providing assets which are then priced with a linear equation. So that equation cannot actually react to market news. So what actually happens is this. If there is a crash coming in Bitcoin, for example, the price on centralized exchanges will start dropping. The decentralized exchange will stay at the original price it was. So a lot of people will move their assets off of the centralized exchange, go to the DEX and start selling, and then naturally pull the price down in line with what the centralized exchange does. So it's a price follower as opposed to a price discovery mechanism. So what we wanted to do, not for the whole market specifically, but for the tokenized market, we want any tokens that are on our platform from real world businesses that are priced in either dollar circle against other tokens, against Bitcoin, to be a price discovery venue for said token. So that business knows that if I look on TIDEFI, that is the real price in the market. That isn't a liquidity pool price where there's been no trading volume in the last 3 weeks, for example. So it's very difficult to do this, however, because a central limit order book requires you to be able to submit limit orders continuously and cancel them to change the price. If you've ever seen the order books, you see them move like this all the way, all throughout the day. That's a submission and cancellation, submission and cancellation. This brings us back to why we built our own layer one. If we built this on Ethereum, it cannot handle the transaction throughput. We wouldn't be able to do it. We would have to build a layer two on top of Ethereum and then do some centralized bundling of transactions and put it back into the chain. Whereas what we do on TIDEFI is everything is layer one. When a market maker submits a limit order, cancels a limit order, this is live on chain.
Okay.
So for us, that's a very unique feature. So for the two reasons of price discovery, which is important. If you want DeFi to go mainstream, DeFi venues have to be a form of price or one of price discovery venues. If they're always price followers to centralized exchanges, they're never going to be fully used mainstream because the Achilles heel is going to be the pricing.
Sure. Okay. I understand transaction fees are really low on the TIDEFI exchange, and kind of TIDEFI seems to have a little bit of flavors of centralized and decentralized inside the exchange. How are you able to keep the fees so low on the exchange? Because ultimately, this is how the exchange makes money, right? From the transaction fees.
Yeah.
How are you able to keep the fees so low on your exchange, Daniel?
So there are two fees on the exchange. One is a trading fee. Trading fee, users pay 25 basis points for every transaction they trade. That's a fixed fee. That's a trading fee, whether you trade $1 million or you trade $100. It's relative to the size of your order. Now, we then have a transfer fee or a gas fee on our exchange, and our gas fee is extremely low. The reason being is that we've set it at that rate in order to make it such that users are not going to be stuck in the Ethereum situation where people would trade on a DEX, say they trade $100 worth of tokens, and then they want to move it off the DEX, and it may cost them $500 to move off the DEX. Gas fees, as we've seen with NFTs and DEXs on ETH specifically and other chains, haven't been a huge issue. You've had people that have purchased NFTs and are stuck on certain platforms because the gas fee is too high to leave. So we did not think that facilitates actual usage and velocity of movement of the token if the gas fees are prohibitively high. But what this also means is once you enter the TIDEFI ecosystem, because we're crypto agnostic, meaning we don't convert Bitcoin to an ERC20 version like wrap BTC, we don't convert any other token into wrap versions outside of our protocol. We ingest the real asset, so you can send Bitcoin into the ecosystem, you can send ETH into the ecosystem, and you have it there. But the cool feature is this: once you're in the TIDEFI ecosystem, if you don't want to trade asset A for asset B, but instead Daniel wants to send Socrates Bitcoin to Bitcoin, so I want to send you 0.1 Bitcoin on the TIDEFI network, it can be done in 2 seconds, and your fee is 0.0x TIDEFI. Extremely cheap. So even if you are what we planned never to do was go against other protocols, because we wanted to bring the whole industry into the limelight via the tokenization piece. So if you're a Bitcoin maximalist and you just want to efficiently move assets around to other friends and users, it makes sense to move into the TIDEFI ecosystem and send it to each other. That way, it's more efficient, faster, and cheaper. And that's why we've made it crypto agnostic, rather than say, okay, Tide Chain is the only way forward and you should all use TIDEFI and that's the only way to go.
Excellent. So the digital asset market in terms of capitalization, I think is just under $1 trillion, around about there, 860 billion or something like that. As I said, we've got about 600 odd centralized exchanges, about 100 odd decentralized exchanges. I think the total value locked in these ecosystems is around about 40 billion. How do you plan to take a market share? We've got these exchanges like PancakeSwap, Uniswap. How do you plan to compete with these guys? Because without the traders, you don't have the liquidity. Without the liquidity, you don't have the traders. What is the plan to take the market share?
It's actually quite a simple plan. So rather than attempting to take the market share of ERC20 traded Bitcoin, like I said, we've already announced that we have ATH Vodka as our partner. They're a vodka brand. They are trading right now in the UK. When I say trading, not trading stocks, as in transacting with businesses, selling their actual business, the bottles of vodka to specific clubs and bars and restaurants, etc. And they're going to have a festival coming up later in the year. So that's a real world business. And we have everyone that we tokenize and work with, we have an exclusive agreement with. So whilst there is 40 billion locked up in, total value locked in the market, we don't technically even need to compete with that. We are setting our own market because we are creating a partnership that didn't exist before, and a business tokenized that didn't have tokenization capability before. So as we begin to outroll the number of businesses that come on board, and we are, again, as we are crypto agnostic, we are business agnostic. We have a biotech company that we're discussing with. We are working in the medical field. We are working in the food and beverages field, as I've said, with ATH vodka. So we are planning to allow you to have rewards for your businesses and have those rewards to be interoperable. Currently, it hasn't been done because there are limitations, whether it be crypto limitations or in the real world, if you have BA points and Amex points, etc., there's only a limited amount you can transact with them, whether you upgrade your flight or pay for hotel rooms. But imagine there's a point where you have a season ticket, you're a season ticket holder for a football team, it's tokenized, you're an airline token holder for an airline, and you have gold status, and you want to swap gold status with someone for their season ticket this weekend because there's a match you want to go and see, you can exchange that, and then you can send it back to them, or you can completely buy that membership of them. Now, that's pretty cool because that's a real world use case. If I'm going to the airport and I haven't flown in the last 2 years because of COVID, for example, and I don't have gold status anymore, if I could use something that I have in my wallet to get that for 24 hours, that's extremely exciting to me because that's actually useful. I'll turn up and I'll be able to get some usage out of it. So what we are creating is, whilst the DeFi, if we look at the total value locked in the ecosystem, 40 billion in the financial market, that's a drop in the ocean. That's nothing. It's a good amount to start, but the real way to unlock DeFi is to produce real world use cases that people are going to use day to day, not caring about the underlying technology. That's how all technologies work. People like Tesla, they don't exactly know how the batteries work and how the car works from A to Z, but they like the concept of it. They find it easy to use, and there are loads of charging points.
Absolutely. So let me ask this question: do any other exchanges have this functionality to be able to exchange these kind of tokenized assets?
If you're a centralized exchange, all you could do with these assets, if we decided to list them on centralized exchanges, just have more venues to trade on, all they could do would be to list them and trade them as Bitcoin. They wouldn't be able to have the rewards functionality because all the rewards functionality sits in the TIDEFI mobile app that's coming out. So whilst it's a token and it can be listed on other exchanges, we have the exclusive agreement with these parties on how these tokens are going to be rolled out, if they're going to be rolled out on other exchanges. It's not a bad thing to have that on good exchanges, honest exchanges with no wash trading, centralized or even decentralized. This is good. It's always good to have distribution of the token. But the actual rewards functionality and the swapping of rewards and the ability to gain access to someone's membership tier overnight only can happen on TIDEFI.
Wow, absolutely. Brilliant. So you mentioned about this vodka tokenization project, and I'd like to think a little bit deeper, actually. And so how is this going to work? So your partnership with this new brand of vodka, I had a chance to check it out. It looks really, really cool. And I can see it in really high-end bars, high-end hotels, and these premium clubs. So tell me a little bit, how's it going to work? Does it work via QR codes? How does the concept work? Okay,
so the bottle on the top has a QR code, right? Okay. And that QR code, when you scan, will take you eventually to our mobile app. For the time being, until we release the token, you'll be in a holding ready to claim your tokens. It'll take you straight to the mobile app when we have the mobile app ready, and you're able to obtain those tokens as a reward for buying the bottle of vodka. That's one way to obtain them. Two, you can come on the exchange, you can use your crypto assets, and you can purchase. We're going to be doing a fiat integration to be able to allow you to onboard in fiat, and we will have a form of decentralized KYC this year as we move into a more regulated environment and looking towards a regulation. That's what we're aiming for this year, because we foresee that as the core to DeFi. But once you have your tokens, what can you do? If you have enough tokens, you're going to get what All-Time High calls a High Life Pass. Think of it as like platinum membership tier. This gives you VIP access to the events. This gives you VIP access to certain perks and benefits.
Yep.
And finally, actually, the most exciting piece is if you attend an ATH vodka event, you're able to then use your phone with the mobile app to then pay for the goods and services that you have at the ATH branded bars. So that's pretty cool. You can send them some ATH tokens, the bar will accept it. If you don't have ATH tokens and you're at the bar and you want to get some, you can do it via payment processor and obtain ATH tokens for the first time. So it's pretty cool.
Yeah.
The tokenomics is very cool as well. ATH will be using 5% of their profits every month to buy back the token. So this is going to create consistent demand pressure relative to how well they're doing in the industry, in the real world. So for us, we're connecting the digital and the real world business and allowing people to have actual use case and access.
Okay, excellent. Well, look, I love all things regulated, and regulation is really big on our radars here. Let's talk a little bit about the regulation of TIDEFI, because from what I understand, at the moment, it's an unregulated exchange, but you are applying for a license in the UAE, I believe. Could you tell us a little bit about this license and what the license entitles you to do?
Sure. So the license will allow us to operate as a decentralized crypto exchange and a tokenization platform in the UAE. So this will be to my knowledge, the first decentralized exchange with a license. We find it super exciting because we've had multiple discussions in the UAE. We think as a region, it's a very forward-thinking region. From a digital asset perspective, there are huge plans there to expand, not just for ourselves, but for the region in general. And we find it as a very crypto-friendly region right now with very clear regulation structure. The same can't be said of many other jurisdictions right now in the digital asset space.
Absolutely.
So we find that super exciting.
Definitely. How will the MiCA regulations affect TIDEFI? We're going to see MiCA markets in crypto assets coming out by the end of this year. Does MiCA cover decentralized finance? Because as far as I was aware, DeFi is not covered under MiCA. Could you tell us a bit about that, how that might affect the business?
Yes. So I think as we look towards what MiCA is planning to do, they're an EU regulatory framework for issuance and dealing in crypto assets. What we're planning to do, as I said just briefly earlier, is to have decentralized KYC. We already have AML on the platform via Chainalysis, which is our partner. Once we have decentralized KYC, we have our AML in place. We will also have regulation in the UAE. Then for us, I think as we start to expand territories and regions, we will already meet the requirements of every region's framework because we are working in the most regulated sense possible from a decentralized exchange. So, and the great thing is this: if regulators need information about wallets, where they're moving around, etc., because we also have built the layer one, it's very transparent and easy for them to see that information. So again, we are not working in a anonymous, nefarious environment. What we are working in is a transparent, easy to use and easy to access decentralized finance environment. That's really the features that we're looking at.
Beautiful, absolutely beautiful. So Daniel, can you tell us a little bit how you first got into this industry? How did you get into this world of blockchain and cryptocurrencies?
So it was about 7 years ago now. I used to work in fixed income FX at an investment bank in trading. And then when I was working at another fintech company, a friend of mine told me about Bitcoin, started researching it. It was like 2016 or so, purchased a couple and Ethereum, looked into Ethereum. And then I started to work at CoinShares, which was Europe's largest digital asset manager at the time. And then I went to work as head of trading at CoinFloor, which was the UK's oldest spot crypto exchange. We launched the world's first physically delivered Bitcoin futures contract there, which was pretty exciting. And then I went to set up in the East Coast of the US metals, digital metals platform. And then we came to today, which is TIDEFI, which was an amalgamation of all the knowledge I gained from a digital asset manager, launching ETPs there, through to two exchanges, centralized, one working on a blockchain-based solution, and now coming to the fully fledged decentralized exchange that you see today, which is TIDEFI.
Excellent. Wow. What a journey, Daniel. What a journey. Congratulations. Really an amazing journey. So the platform itself, it's operational right now. People can go onto the platform and trade.
Yes.
Yeah.
Yes, mainnet is live as of September last year.
Perfect. Okay. So Daniel, I'm always kind of interested. What would you like when, as a younger self, a younger Daniel, what would some of your school friends tell me about? Because I've got a funny feeling you was, really good at class, top of the class, top student. I know that you've got an excellent degree in maths, so I'm really kind of curious to find out what you like at school. Because me, when I was school, I hated it and couldn't wait to get out of there personally.
Well, so I guess at school it was I'm sports orientated, like football, like athletics in school, and as you said, my degree was in maths and economics, so I always found maths like quite easy, and of course anything you find quite easy you like, right? If you do well at something, you like it. Yeah, no, generally in school I quite liked school. It was good, and then going on to university was great as well. The concept of like learning new things I do enjoy. So this is why when I started to hear about Bitcoin, I had seen it a couple of years before, but never really researched deep into it. And then when I started to delve into it, I saw the implications of what could be done, not just from a business standpoint, but I thought it was extremely cool how the new version of finance could look. It could be in 5, 10, 20 years, but it's very interesting when you see people who started at the beginning when all derivatives were traded in the financial markets at the beginning. They got the first insight and were able to, do great things. And I see the digital asset market in the same way. It's a very new market. There will be failures in the market, as we've seen in the news recently, like huge failures, a lot of money lost, but innovation won't stop. And innovation continues day to day. So for me, that's super exciting. So I'd say, at school, yes, I did well at school. But I enjoyed sports quite a lot. And I'd say people would, if there was one where they said like very ambitious.
Good, excellent. You are indeed, Daniel. You are indeed. And apart from appearing on Blockchain People today, what would you say has been the most memorable moment of your career today?
I think it's when we put mainnet up, because when we put mainnet up, I think everyone in the team was up all night. It's like 5 a.m. my time. We have distributed employees everywhere around the world, from US all the way to Eastern Europe. So our time zones were all in a mess. And, as we saw mainnet go up, that was a huge, huge kind of achievement, right? After all of the work that's been going on, you can do as many tests as you want, but until you turn on that button, you don't know for 100% certain everything's going to work, right? And we have a lot of stuff, at risk. We've got a blockchain and a DEX simultaneously. So I'd say that's the biggest achievement today. And from a personal standpoint, biggest achievement is probably my son. He's 8.5 months old. So So
yeah, I understand. And so finally, what message do you have to your younger self?
I would probably say relax. Don't worry about what's going to happen. Just let it go. The path is always made for you, even if you don't realize it's made. And I've had points in whether it's career or personal where you think, where am I going to go now with this, or where is this going to go eventually? And then suddenly it takes a right-hand turn, and then suddenly you're on this like new path, and it's super exciting. So don't worry about where you're going to go. Just live in the moment, and everything will pan out.
Excellent, Daniel. Excellent. Now, I understand that TIDEFI is also looking for strategic funding as well.
Yes.
I understand you're looking to raise funds as well to take the operations to the next stage. If anybody wants to get in contact with you, Daniel, what's the best way then to contact yourself?
I'm happy for anyone who's interested to contact me on Daniel.Elsawey@TIDEFI.com, our email address. If there's any other methods, I'm happy for them to shoot you guys an email if you want to put us in contact. That would be great. Yes, we are. We're doing our second funding round. We raised 3.3 million originally. Now we're looking to raise $5 million. And for the aforementioned items that we actually briefly spoke about, Socrates, getting our regulatory license, ramping up our tokenization partners and businesses and building that out, and getting to the point at the end of the year where we're in a position where we have multiple tokenized products trading on the platform in a regulated, decentralized KYC environment.
Excellent, Daniel. Excellent, Daniel. So if there's anybody out there, VCs, and I understand the opportunities at equity level as well within the exchange as well. So yeah, please feel free to get in contact. And well, Daniel, thank you very much for joining us today. It's been a real pleasure. Hopefully our viewers will get to understand a little bit more what DeFi is, what decentralized finance is, what a decentralized exchange is. So I thank you for that, Daniel. So all our viewers and listeners, thank you very much for listening today, and all the best for 2023.
Thanks for your time, Socrates. Have a good rest of the day. Cheers.
Thank you, Daniel.